So, through the power of social media, looks like we are live again. Patrick Queally here, your friend in the mortgage business and host of the Wicked Awesome Report, joined by my co-host Declan O'Toole from Select Real Estate. Thank you very much for joining me this morning, Declan.
Thanks, Patrick.
We broadcast every Tuesday and Thursday at 10 a.m., so give us a comment, give us a like, share, head over to the Wicked Awesome Report Facebook page. And we have a special guest with us this morning. Good morning, John. We have John Pugh from Pugh Management. How are you?
Good morning, Patrick. Good morning, Declan. I'm great. Nice to be here.
Well, thank you for joining us. It is an interesting environment that we're currently in. I keep using the term, it's business as unusual. Okay, So, John, we're going to dig in a little bit into what you're doing and how you see things changing and developing with real estate development in the pandemic environment. So, why don't you give us a quick little intro? Tell us about you and your firm and what it is that you do.
Sure, absolutely. So, Pugh Management is a business that partners with family offices and ultra high net worth individuals to develop real estate strategies and then implement those strategies to develop real property. So we work with groups that have an interest either in expanding their existing operation through partnering with us as a third party or through working with us directly as a co-general partner on deals. So That's really what we do. We also find projects as well for families that are interested in developing a particular strategy.
Okay, so you're talking about buildings and structures that already exist, or you're looking at raw land and develop it from the ground up, or both?
Well, it's both. We do, primarily at my background, I'm a registered architect. I've worked in construction, so a lot of what we do is ground up development. So utilizing some of those skills. So there is some interest in redeveloping existing properties. It's just really a matter of what my partner is interested in doing, and what type of land or property they own prior to getting together to have that conversation.
Cool.
Yep.
And
geographically, John, where are you located specifically in Boston, or New England? What's your...
Sure, that's a good question. I'm in Boston. Do also have an interest in New York and the Tampa, Florida area. Spent a lot of time in both cities. But primarily right now, our projects are in the greater Boston area. So we have a couple of projects going on in the suburbs today, and we're looking to expand.
yeah, well, I'm just going to throw a shot in the dark here. I would tend to think that raw land development in the Metro Boston area is pretty tough to come by. So it's got to be some redevelopments and tear downs, and then build from ground up after a teardown. Is that more typical of what you're doing?
Yeah, that's a great point, Patrick. There is very little raw land. You have to go fairly far out into the suburbs to find raw land to develop. So a lot of what we do is referred to as infill development. So we're finding existing properties that are either distressed, neglected, or underused, and then redeveloping those properties.
Okay.
So one example would be a project we're working on right now in Polbrook, Mass, which is an existing bowling alley. It was previously also a driving range. So there's we're looking to redevelop that. We have approvals for 220 apartments and about more than 60,000 square feet of retail and commercial space. So that's just one example.
Yeah, well, that's great. So that leads me to my next question: the type of redevelopment. So it sounds like the project you just mentioned is more of a mixed use. So I assume sort of retail on the ground floor and apartments above. Is that a typical type of project for you?
Yeah, fairly typical. I mean, we definitely have experience across different asset types, but really it's been a focus on multifamily and mixed use in a lot of different locations. Multifamily hasn't been so popular the last few years. There's an interest, some partners I'm working with, to expand into some industrial development as well. So have been looking at some of those properties. But the experience kind of runs the gamut. And at this point, the two projects under construction and in early phases, they're all multifamily mixed-use assets today.
Okay. Go ahead, Declan.
Size job. I imagine you're not so you're behind that with the individuals. You're doing a lot of development. Clearly, it doesn't look like you're flipping 2 or 3 families. Do you have a range, or what's your, the minimum size of a project, or a maximum?
Yeah, I'd say minimum size of our projects are around $20 million, 20 million plus. So we're the project in Lincoln is a bit more than $20 million, about $22 million. That's a 60-unit deal. It's a multifamily 60-unit deal that we're working on. We're actually having a grand opening today, so very exciting news there. So that's been a great public-private partnership with the town of Lincoln.
What's the name of that one, John? Just so we can get the word out there.
Sure, it's named Oriole Landing, and so Oriole Landing, it's a public-private partnership with the town of Lincoln. The Affordable Housing Trust Fund there also provides some of the equity, which was fantastic. Actually, grant, which was fantastic. So we've worked with Civico Development on that, and it's 25% affordable. So it helps with the management of some of the affordable housing resources there in town. So we're excited to get going. So we've actually already got a few people moved in, and we're finishing up that. So
Awesome. Fantastic. Fantastic. And how does that relationship typically work, John? So do you have clients that come to you and say, we have money to invest, we don't want to put it in the stock market, or we just want to diversify in real estate, help us find a project? Or is it typically people that come to you that have an area of land or distressed property that they don't know how to redevelop it?
Well, it's a great question, Patrick. It's really a little bit of both. There are groups that have existing property that we work with that we've partnered with to develop. For example, the project I mentioned, Holbrook, family there owns an 80-acre parcel. It had been previously approved for the 220 units and the retail commercials piece. And so I've been working with them to get that off the ground, get that designed and built. So, and then there's also another family I work with where I've actually found property for them to develop. We've started at the very beginning in terms of figuring out, what types of properties they're looking to create, and then going and finding those properties with them, for them, with them, and really beginning at the very start, which is the approvals process.
Yeah,
So.
that's cool. So it goes both ways. You have people with land coming to you looking to, for how to redevelop it, and you get people that want to get into that, and you help them find the land.
Yeah, and I think it really comes down to, there are groups that have an interest, kind of like you said, in getting into real estate development, direct real estate investment. So I work with those people to come up with strategies, really craft strategies that are customer specific to their needs and their interests in terms of cash flow. There's all types of investors, right? There's groups that are looking for a high return on their investment, and then there's others that are looking for a high annual cash on cash return. And so those really vary by individual circumstances. And so that's something that we do. We spend some time, at the previous background in management consulting, and so really learning and using some of that experience to sit down and work with groups to figure out what it is that they really want to focus on.
Awesome. So yeah, I was going to say, just it ties in a couple of different things with your architecture background. It's got to be rewarding to see the plans really come to life and see that be built, but also on the management consulting, helping more than just the physical structure, helping those clients develop their financial plans and see that come to life too. So you get a twofer going for you right there.
Yeah, it's an interesting point. I think there is I love seeing a building, the physical thing get created, and then really provide quality environments for people to live and work in, right, and play in. I think that's really satisfying. But then also working with groups to figure out kind of the financial strategy. So many times, I'm partnering with financial advisors or wealth managers that are advising family offices that may or may not have a real estate background, and then I can work with those groups to figure out what types of assets they might want to invest in, which can provide some of which kind of really plugs into their existing financial plans.
Sure.
So John, you mentioned a couple of times you're working with a couple of families. You mentioned family offices. Is that sort of a niche that you have that you feel you're good with? Is working with, I suppose, high net worth families, or like the individuals?
Yeah, that's a great point, Declan. It really is a niche because when you look at it, there's a lot of developers. Most developers are solely focused on kind of developing their own properties and creating their own development company, if you will. And so we are developers, and what we do is development, but a lot of it is focused around what are the needs of the family, not necessarily our needs. It's more providing that value for families that are interested in investing. And so if you look at a lot of the development shops, they themselves are family owned, typically family wealth that is behind many of those investment development shops. But there's plenty of families out there that have that interest, but they don't necessarily have an interest in hiring a development staff. So that's really where I fit into the process and they provide a lot of value.
So. Awesome. So how'd you fall into this line of work?
That's a great question. So I worked in finance for 5 years prior, down on Wall Street prior to going to MIT for my architecture degree. Did a master's of architecture at MIT, and really.
Hold on a minute. Yep. A master's in architecture from MIT. Now that's something you just kind of glossed over. That's not a little achievement. That you just kind of glossed over that in general conversation. That sounds like a big deal.
Well, a lot of work.
Yeah.
I enjoyed it. It was a lot of work, and it's interesting. I had a great conversation with a guy yesterday. He and I were talking. He and I were programming at the same time, and he's involved. It's something that I've always been really interested in, and I've actually had a hand in is the prop tech space, which is real estate technology. So we're using some of this type of technology, this prop tech, on some of our projects today. Whether it be, there's a group called Co-Urbanize that helps with communications, managing the online conversation about development projects during the approvals process. That's been really helpful. And anywhere from them to groups that are helping monitor performance of building systems in real time. So there's a lot of these different really interesting technologies that I learned about at MIT while I was there that not necessarily everyone is aware of. And so that really also provides another layer or facet of value for some of the families. So I introduced one of the families I work with to a prop tech an entrepreneur who was looking to raise capital for an investment. And so that's also something I'm involved in and I help out with where I can. And it's something that I really have an interest in. Because really, there's so much investment that's going to be going into prop tech in the next 5 to 10 years, just because of how far, basically how antiquated the industry has been, because there's been a lack of that investment, right? So having worked, I mentioned finance, that was, I was working really in financial technology, the institutional trading side of things. It was a lot of software development type of work, and so I'm very familiar, and also with a startup, a financial technology startup. So that really kind of helps me plug into, with the MIT experience, some of those pieces that also add value to our properties, but also our relationships.
Yeah, so financial management and the architectural building space. It seems like a unique, but when you step back and look at it, it seems like a proper fit. I mean, that is two things that uniquely have you positioned to work in this field. So good for you.
Yeah, thanks. I do think it's fairly unique. I've definitely met a couple of other groups with somewhat similar tech experience, but it does helps me differentiate myself, which is what we're all trying to do, right? So.
Yeah. So with the current, I guess, pandemic environment that everybody is referring to, how's your business operations changed, and how are you operating differently? How are your clients operating differently in the current environment? And we'll talk about what you may think is happening for the future.
Yeah, I mean that's an important question, Patrick. I think we've all been dealing with now for 3 or 4 months at this point. Clearly, it's forced a lot of the conversations to go online that were previously not. There's a lot of online marketing and tours that we're now doing, especially for the Lincoln project I just mentioned. So we're in lease up right now. We've gotten a lot of traction. We've got a lot of interest, much of which has been through online leasing and virtual tours. But it's still been a challenge, right? And so I think, that property in particular is really, really well located, given the particular situation that we're in, because it's right next to an on-ramp to Route 2, goes directly into Cambridge. You can get into Cambridge in 20 or so minutes. But it's on this beautiful bucolic setting. There's a lot, one of the focuses of that development or landing is an agricultural focus. So there's curated gardening, which is, there's a monthly visit by our professional gardener that works with some of the residents. And so there's all these green spaces, additional outdoor space, which really can allow for more enjoyment and better, really, to some extent, better living conditions for people who don't want to necessarily be stuck in a small apartment city. Right?
Yeah, those definitely sound like some interesting amenities at that place. Yeah.
Yeah, and so that's kind of an interesting theme that we developed. It was previously a horse farm. It was a very nice. It was actually named Oriole Farm, and that was where we kind of got the name from. But in addition to the typical amenities, we were really looking to connect with some of the really positive features about the community. And it is, refers to it as a semi-rural community. It really is, but with nice access into Boston. So yeah, in terms of, the rest of, I've really gone more focus on LinkedIn marketing and LinkedIn connecting with potential partners and new business opportunities, which has been a positive thing. There's been obviously lots of virtual conversations as well online like this. But I think in the end, clearly there's going to be a rise in investment in e-commerce, industrial warehouse space. That's been taking place and it's continuing to take place. There was a JLL report out recently saying that there's going to be projected to be 1 billion plus square feet of space demand in the industrial area just because of e-commerce, which is not surprising given the fact that Walmart is looking to expand and compete with Amazon Prime.
Yep.
And then there's, like I was just saying a moment ago, the multifamily space is going to have to continue to develop and evolve. Co-living is a really interesting living setup that's, this tech-enabled situation where there's an app on your phone. It allows for, all types of virtual communication between the property manager and the residents, but also the residents themselves, and creating this connection, this community through these series of curated events. So there's a lot of things there that I think are going to be valuable in the future as well. That's been interrupted a little bit because a lot of those are being created or have been created in urban spaces.
Sure.
So I'm curious to see what happens with that, but that was really a trend that was pushed by because of how high rents have been. Right? And you want to be in a great urban location. You don't have $4,000 a month to pay rent to live where you want to live. Then maybe you pay $2,500, $2,000, and you're in the same space, but you don't necessarily need to rent an entire apartment. So I'm curious to see what happens with co-living. I think it's here to stay. It's just a matter of 6 months to 12 months. What does it look like? Right? So those are some of the interesting trends that I've been kind of following during the pandemic, and some things that I've been observations. Declan, you and I were talking earlier about pricing of multifamily housing and kind of seeing where that goes. The numbers, as we both know, haven't really changed very much in terms of pricing, but there's got to be some impact with, especially in the Boston area. If you just take that example, there's a huge amount of Boston multifamily housing that's occupied by students, a lot of whom aren't necessarily going to be in the heads that aren't going to be in those beds. So I'm curious to see how that impacts.
Those that are in those beds are not moving to other apartments, so it's slowing down the whole process.
I'm also curious to see, especially with the off-campus stuff, Declan, I'm curious to see, are kids going to still want to be in those apartments nearby school because they have friendships, relationships that are in place? I mean, we all would, at some point when you're in college, you don't want to really be with your parents, right? So you want to have your own independence and everything. And so there may be some of that, but in the end, I highly doubt it's going to offset the number of people that aren't going to be there. So I'm curious to see what happens with pricing. Like I said, my expectation is it will come down, but maybe it bumps back up, quickly. There's also the retail space, the retail and hotel space, and how distressed that is right now, which I think is really interesting. Well, it's distressed. The expectation is that it's going to become distressed. It is distressed in some instances already. So there's an interest there in finding opportunities to redevelop some of those properties for myself and some of our partners. But we'll see. I mean, I've had a couple of conversations with people that are working in economic development, a lot of these cities and towns, and they're excited about rethinking some of their areas and spaces, whether it be sidewalk dining or more takeout or whatever it might be. There's clearly an impact, and there's an impact even today, but I'm really curious to see 12 months from now what things look like.
Yeah, so that was one of the questions that I had. So with some newer developments and planning and permitting phase, governments are somewhat notorious for moving slow. Okay, have you seen any sort of reaction from any of the planning boards or anything like that in terms of how they may be dealing with future development due to the pandemic and then the future needs of whether it be residential or commercial development, those tenants that are in those buildings?
Yeah, that's a great question, Patrick. There's still very much an interest in seeing development in cities and towns because of the fact that everyone understands that that's going to bring positive economic benefits. There hasn't been, from what I've seen, a lot in terms of, planning boards aren't typically telling you what type of amenities you should have or parking requirements, things like that. I think, if anything, some of the planning boards recognize the pretty challenging economic situation that we're in, and they're becoming more pro-development in some instances. So,
okay.
But that being said, I had an interesting conversation with another developer the other day, and he and I were looking at a property in an urban part of Somerville, not too far from Cambridge, and the conversation really was, hey, how do we make an argument around, okay, so no one's going to be at Harvard or MIT this year. How do we make the economic, the financial argument to continue with the development in this particular situation? There's a lot of interest in continuing some of these developments, but the reality is, are we going to still have the same demand once it's done? And he had an interesting comment, which is, okay, 3 years from now, when the project actually opens, once it's been approved and built, is the demand going to be what it was, 6 months ago? And the answer is probably yes. Probably yes. There's going to be an impact, but at some point, COVID is our expectation is that COVID will be contained in enough of a manner that people can go back to somewhat the way that they were living previously. So, but there's also the comment about, things like retail, which is becoming less and less required, right?
Yep.
And it's a nice to have ground floor retail, and it's something that a lot of planning boards have been pushing as a way to activate the streetscape, which I entirely agree with. But then there's also having retail in places that it just doesn't belong. And so hopefully that helps some of these planning boards and city and town officials to think a little bit more. It's hard, it's a nuanced thing, right? If you're off on a side street and you're requiring retail,
Yeah, it doesn't make sense. Yeah,
it doesn't make that much sense. And so there's been flexibility in the past from some of these planning boards, but there's also been some inflexibility in certain times. And so it's really important to be able to have those conversations. And I think, if anything, COVID and online commerce has really accelerated some of those trends. So I'll be curious to see what happens with that and what happens with our city streets and trying to activate does, because there are ways to do it, but I can't tell you what they are today. So.
Well, we're all of us are going to be counting on you. We're counting on you to figure it out and put it in place for us. All right. So no pressure. No pressure at all.
Give me 6 months.
Yeah.
Maybe a year.
Yeah. Oh, all good stuff.
So the speaking of which, so you've gone through. You're looking at obviously industrial buildings. You've looked at co-working, co-living is a great example. But by the way, for those that don't know, it's not like everybody's living in one space. You've got independent apartments, but there's a lot of common area facilities, including things like the agriculture there. So those are the trends you're going in. Obviously, you've done a lot of stuff in the Boston area. You mentioned something about you obviously gone out to Hopkinton, you've gone out to Lincoln, and you're looking at New York and possibly Florida. Are you looking for new partnerships? Or are you working with the people that you have right now in place? Or are you looking to expand in terms of your strategic partnerships with family offices or with other?
Exactly, Declan. We are definitely looking to expand our relationships and partnerships. So we'd love to have people reach out if they have an interest in potentially working together. We have the capacity, the bandwidth to partner with some additional families on projects. So, like I said, it's something that we do every day, and we have the experience to take a project from kind of the gleam in the eye all the way through lease up and completion and the sale of the project. So that's something that we do. We're in Boston, as you said. We have an interest in, we have experience developing in the suburbs of Boston as well as in the city. So certainly very open to having those conversations. And if people want to reach out, they can reach me at John, JOHN, at PUGHMGMT, PughManagement.com. PUGHMGMT.com is my website, and go there and learn a little bit more. We'd love to hear from you.
Yeah, we've got the Facebook page tagged in the Facebook broadcast as well too, so that's a good place to grab all the information.
And of course, LinkedIn, you've got a decent LinkedIn page there too. Gives a good explanation of what you do. So
absolutely, yeah.
Yeah, so we'll be Declan will be doing some editing and posting this to LinkedIn as well. So count on you, Declan, to also tag John and his company in that post when it heads live over there.
Absolutely, sounds good.
All right. Well, I think we're approaching close to the time allotted here. We want to be respectful of your time too, John. So, Declan, any last questions for our guest?
Well, I think you gave a pretty good breakdown of what you do. It looks like I know certainly you seem like you've got a good niche there with the family offices that are family companies. So it's certainly a different angle on it, and certainly love to have you back again in terms of as things change, during and after COVID. Then we can come back and have further discussion about the greater economy and real estate around the Boston and greater area.
That sounds fantastic.
Yeah, like we said, no pressure, but we're counting on you to figure it all out for us. Okay, so
I'll get back to you.
So we'll give it a couple of minutes, and once you have the master plan nailed down, we'll have you back on hopefully, and you can walk us through what the solutions are.
Appreciate that time.
All right, John. Well, thank you again for giving us some time here to come on with us, talk about what you're doing. Hopefully we can drive some business to your door, and looking forward to seeing what the new developments you have coming up in the future will be. So want to thank everybody for tuning in. Thank you, Declan, our co-host here. So this is another edition of the Wicked Awesome Report. Give us a like, give us a comment, give us a share. Head over to the Facebook page, Wicked Awesome Report, and give us a like there. You'll be notified next time we broadcast live. So let's wrap it up. Again, thank you, John. Thank you, Declan. And until the next edition, hope everybody out there stays awesome. Take care.